Good morning, everybody. Eric Mashinsky, Gold Investment Letter. It's November 9th, post-election result day. Just getting caught up here as we've had a couple of hours of market action. We sent a note out last night. I was delirious. It was like almost 3:30 in the morning. And the markets, the S&P futures, were plunging around the world, limit down. Excuse me. And emotion gets in there, and I think I jumped the gun a little bit as well, thinking that we were going to see some follow through on the open. And I got a message this morning from a premium subscriber that was of the ilk of, sorry, dude, everything's not going to shit. And, Trump's good for, people are realizing Trump's good for business, and gold's not going to skyrocket, and the markets are going to crash. I just responded that I'm glad, in terms of today, that's fine. I think that if we had a chance to make money on our hedges and had that protection in place versus the fact that we might not have had it in, before mentioning it and taking that position on, that's what we have that there for. I'm not here to look at the demise of markets or the United States or really anything to profit from what we do in gold, and I don't think we need to. And in fact, I'm really an eternal optimist. I rarely like to comment about politics because my view is that bull, bear markets and the way that they end up seeing themselves out. We look at, like, for example, let's look at the bond bull market, 35 years, which I think is over. It's a little concerning, as I heard Jim Cramer say the same thing today, that was a generational low in July. But look, that was over a 35-year span. And we had presidents on the left, presidents on the right. It didn't matter. This was a massive secular bull market in bonds that no administration in the United States is going to change. And so there's hiccups along the way, and there's cyclical bulls and bears, as we've seen, like in gold as well. It's a good example to take us back to 2000, up 10 years in a row, 4 years down. Now we're back up for our first time in our first time in 5 years that gold and the mining stocks are coming back up. But gold, just because it's not up $100 today, I'm not disappointed, and nor do I care, in a sense that gold's going higher, and the secular bull market in gold is going to do what it's going to do, whether it was Trump or it was Hillary. It doesn't make a difference. The Fed even can slow these trends. The government and big banks, everybody talks about manipulation, in the gold space. And, is there manipulation? Absolutely. But it doesn't matter to me, because all that does is delay. It does not deny. It does not stop these cycles from playing themselves out. That's the good thing about these markets, I think, is that eventually, sooner or later, the truth is found, and things are going to seek their place in the market, because it's a global marketplace. It's not just America. And, that's why I like to make these bets. And bets on gold, for example, are really in place from a long-term perspective. And the debasement of currency and all of the things that I've gone through about why, we like gold as at least a minimal portfolio percentage, but really also being in the bull cycle is, I believe, the way to make money, protect yourself. Now, that being said, I've expressed some caution. In fact, we were up 20-25% on dust in premium just over the last week. We ended up buying it in the low 30s, sold half over $40 within a 2-day period. And so I'm not afraid to look at this marketplace from a standpoint that, what's it going to do next? I'm long-term bullish on gold and gold stocks for a myriad of reasons. In the short term, I've even talked about it here. There's a lot of uncertainty in terms of, if we're looking out a month, we're looking out a week, we're looking out a couple of months, this market could decide to go lower before it ends up going higher. We had such a massive move that from January until July, August, that a significant consolidation and retracement would be very normal. And so you know, it's not about getting locked into just one view, and I'm not looking at things that way. I'm long-term bullish, and I made a decision on that from a fundamental perspective on gold and silver and mining stocks. You've heard those reasons, and that's not going to change unless there's some substantial evidence to make me change my mind. In addition, let me just say this about the stock market. So what have I done today on the SRTY and the TVIX pairs? I've done nothing. You know, I wasn't in this really with these trades as just a hedge against the election. Now, if we saw the Dow and the S&P limit down this week, and we had a massive sell-off, and the TVIX was up 50, 100%, and SRTY was up huge, I would have sold some. I would have probably taken some profits. I would have sell half of the TVIX in an extreme environment. But what I'm in that for is the S&P has not been able to make new highs. We're 8 years into a bull cycle with no recessions in America. And stocks are fully valued. That's what I would say. Are they overvalued? Are they undervalued? They're fully valued. And so the performance on equities, if I look out 5 to 10 years, I just don't think the returns are going to be very good. And we probably, very likely, in fact, I would say with certainty, you know, we're going to have another recession in the United States. How long is it going to take? I'm looking at it from that perspective, not just, you know, what's the economic data quarter to quarter. We can get caught up in that, but I'm just looking at it from the perspective that stocks look like they could be topping out. Bonds look like they're high, and yields are going high. This is something that could last decades. It could be at the beginning of, because whenever that high in bonds and the low in the long bond in terms of yield, you know, when that is places in after 35 years or it's 40 years, if if that's in 5 years from now, the cycle that changes is going to be, these cycles are very long term. The stock market cycles are not as long in the sense of, they're just not as steady, they're volatile. We'll see cyclical bulls, we'll see cyclical bears within a bigger secular movement. So one of the key things I look at, and as far as like my shorts, SRTY, these are hedges. I mean, I don't have a lot of exposure to traditional assets. I've sold a lot of just general equities. I have some healthcare plays that I'm long-term invested in that are special situations, and I have a lot of alternative investments. Cash is a real asset allocation, I believe. And then a lot, the vast majority of my net worth is in gold, silver, mining stocks. Call me crazy, but that's where it's at. That's where I believe there is the value, and that's what things are going to give me the most bang for my buck. But the S&P 500 and the Dow Jones, if they best their previous high, and we see volume, they go to new highs, I'll cover those shorts, those hedges. Those are going to be gone. And so if we have a technical confirmation of this bull market in equities not being done, then that's a time to just take it off. But in the interim, when you see a market that's making lower highs and rolling over, and we've had such a long, huge, monstrous run, I think it's prudent to take some caution. And I think it's prudent to measure our expectations. If you are an investor long-term, looking at 401k or IRA in terms of equities, it's not about moving in and out of a lot of this. And I hope a lot of you realize that I do walk and chew gum at the same time. I have 4 gold investments in companies. I use this as an example a lot. I have a set amount of stock that I own in that company that I'm just not going to sell. I'm going to wait until I think that we are at the tippity top of the gold bull cycle, and that enough time has gone by for me to maximize that investment. In the interim, though, when we have big swings in gold and gold equities, which happens and it can be very, very significant as we've seen, I will increase my position in that company when I think it's cheap, especially when I've sold stock higher. And when I think it's really expensive, there's a certain part of my position that is flexible. I can do whatever I want with it. But there's a part of that position, the bulk of that position, is non-negotiable. It's a long-term holding. And I've put that into that pocket. So, I just want to be really clear about what my intentions are around some of the comments even that you could take from what I made last night. It's not that I'm disappointed that the markets didn't crash today. I think it's good, that we're going to see some potentially big changes in Washington. But, who knows? Trump could do a lot of good things, but he is a wild card in a way. And I think that's why a lot of the big Wall Street monies initially reacted the way they did, because he's not going to let the party keep just going on into the real hours of the morning. He's going to make people go home, take some sleep. And so that's going to be interesting to watch as it pertains to the performance of our economy and of our stock market. And one other thing I'll say about that is, the fundamentals in terms of our economy are a part of driving performance in our stock market, but they're actually not the majority. I may include this in my next issue with some data that shows that typically what it comes down to in a bull or bear cycle in stocks is PE contraction or expansion. It's a situation where earnings on the S&P, they fall below, 10 times earnings, 12 times earnings, 8 times earnings, and a bear bottom, and then they're rising into that bull market. I mean, not even be improving then, but the markets are anticipating improvement, and that PE expansion kicks into gear. And the economic data from time to time can be mixed. It doesn't necessarily have to be a boom in GDP growth, although that helps. So there's a lot of things here at work in our markets and our judiciary system, although it looks like the Republicans are going to have the majority in the House and the Senate, and it looks like they're going to be able to move some things through. But in any event, my views on gold and the gold bull market and the mining stocks has not changed. And I'm long-term bullish on these things. In the short term, I don't, let's see what the markets tell us that they're going to do. I still think there's a chance that, when you look at the way that we're trading in this range on GDXJ and gold still hasn't broken above that ceiling that we talked about in the fall review, which is our multi-year trend line coming down around 1330, 1340, somewhere around there, where gold keeps touching up on it. It is a multi-year trend line. It is the last hurrah of this thing just starting to get funky and really rocketing on the upside. Until that happens, we also showed, you can go on the blog and look at the fall review, you can see that roll over. I mean, there's even a small percentage chance that we could see new lows under before it takes off eventually. I don't think that's the case, and I think we're actually getting really close to busting through this channel. It could happen anytime, but again, we saw that resistance taken down, even though overnight it looked like we could even bust through that and be at 1400 today. So we're not getting that confirmation yet, and I think until we do, until the mining stocks decide on what their next move is, what encourages me about the mining stocks, I was saying this to myself the other day, you look at those weekly charts, pull up the weeklies, go to stock charts, pull up GDXJ, pull up MUX, pull up MUGD, pull up whatever you want, and look at that hook. Look at the way this thing is setting up and could just explode higher. And I'm like, all we need is some sort of a catalyst. There's some volume where this market reverses. It's going to be on again soon, but let's see it happen first before we start to celebrate. And these are some off-the-cuff comments, but I just wanted to elaborate a little bit on last night. At least the global markets are not seeing this as the end of the world with Trump. I do agree that he is going to be very good for business. I'm excited about some things, which, Obamacare is going to be gone. It's a mess. And, I don't think Trump is going to let that stick around. That'll be the first 100 days type of stuff, possibly. So that could be interesting. Lower tax rates, small businesses are going to be helped by this administration. I'm one of them. So that's it for today. Let's keep our head on straight and keep marching forward. That's it.